Hello, and thanks for joining us for this webinar, The Truth About the Investment Marketplace. What we're going to do is pull back the curtain on the business of investing and reveal some hidden defects that can have a real impact on your success as an investor. In all, we'll look at three distinct business models. The three models are the retail model, the institutional model, and the NS Capital model. First, let's step back and ask what appears to be a simple question. What is investing? Simply stated, it's your money getting into the capital markets. Here is some historical perspective. In a little over a half a century, we have changed from a direct ownership society to one where middlemen have positioned themselves in between you and the capital markets. Corporations now own and control over 80% of all stocks, as opposed to 8% in 1945. John Bogle, the former founder and chairman of Vanguard, describes this as the pathological mutation of capitalism. Why does he say this? Because today, the asset management business is huge. Thousands of companies, 100 million clients, and 10 trillion plus in assets. But it is dominated by these 50 companies, who control around 90% of all the assets invested. As a matter of fact, the top 5 alone control almost 40% of all assets. Do you have an investment with any of them? Of course you do. An important fact is that over 90% of these companies are public, and 2 that aren't, Fidelity and American, are so big they might as well be. The fact that the industry is dominated by huge companies creates a competition between the asset management company's obligation to be stewards of its clients' money and their quest to generate profits for their owners, the company's stockholders. This competing loyalty creates a profound conflict of interest, but it isn't much of a contest. Profits are the runaway winner. We're going to start with the retail model, the one we believe no longer works well for most investors. The retail model has the most moving parts, and getting your money into the capital markets looks like this. With the advisor, the distributor, generally a brokerage firm or custody platform, and the asset management firm in their various middleman positions. Many of the major firms, like Morgan Stanley, Bank of America, and UBS, actually occupy all 3 middleman positions. In many ways, this can be compared to an investor running a gauntlet that, as we will see, can inflict a lot of damage on an investment portfolio.